Thanks for joining us at XM.com for this Forex Preview video. We'll be having a look at the Reserve Bank of New Zealand policy meeting early on Wednesday. I'm Christina Marucas. Joining me today is Senior Investment Analyst Rafi Boyajian. Even though the latest economic indicators out of the country have started to take a turn upwards, Rafi, global virus risks still remain. Now, the RBNZ has already expanded its QE program and has expressed its determination to add further easing to its policy should it be needed. Therefore, could we expect even a rate cut at Wednesday's meeting?
Well, Christina, the RBNZ has made it pretty clear that a rate cut is unlikely before March 2021. But before then, we are likely to get some additional measures. We've been talking about a cheap lending program for banks for some time now. So there's high expectations that the RBNZ will launch a funding for lending program at its meeting on Wednesday. Now, you could argue that the RBNZ is buying itself some time before taking rates to negative territory by launching this funding for lending program. But really, this program is essential before going negative because it would help with the transmission of negative rates into the wider economy. But aside from that, though, we are seeing signs that the recovery in New Zealand is strengthening as the country emerges from its second lockdown. And plus the existing measures it's got in place, the asset purchase program, which it recently expanded, like you mentioned. And if it does go ahead with this lending program, there's growing doubt whether or not negative interest rates will be necessary in New Zealand, because if things do continue to improve, then we might not even get there.
Now, turning to the New Zealand dollar, the U.S. election has helped the Kiwi to soar to multi-month highs, which the RBNZ might not be too happy about. What could the central bank signal to stop the currency's rally?
Well, there's not a lot they can do other than maintain a very strong easing bias. We are seeing, of course, this huge surge in the Kiwi because, of course, the US election, the outcome has ended this uncertainty. And, of course, Joe Biden winning does mean that we're likely to see reduced trade tensions. And over the past day, we've also had some positive news over vaccine for COVID-19. So all of that now means that the outlook for the global economy is looking somewhat brighter. And all of that would, of course, be very positive for New Zealand as well. And given that the Kiwi is highly sensitive to risk appetite, of course, we are seeing those very strong gains. But of course, all of that is not going unnoticed at the RBNZ because a strong currency would harm the country's exports. So at this rate, even if we do see the improved economic outlook, the RBNZ might nevertheless still be inclined to take rates to negative territory because the Kiwi is too strong. So that's something to bear in mind. So even if we do see things looking much brighter both in New Zealand and globally, that might be one reason why the RBNZ is likely to remain very dovish and would keep the option of negative rates open because it might still be required to do that just for the sake of keeping the currency down.
Rafi, thank you for joining me today. This was a Forex Preview on the RBNZ policy meeting on Wednesday here at XM.com.